My name is Mike Palmer. I'm Managing Principal of Ark Royal Wealth Management. We focus on helping successful people make smart decisions about money. I think the value of advice is really bringing some simplicity and some cohesion to topics that are really complicated for most folks. When someone has to deal without an advisor with estate planning and coordinating retirement planning with their investment portfolio, that can be very overwhelming. An advisor ties all those pieces together, much like mortar binds bricks together, and it makes it a stronger plan. We all have, I would say, blind spots, particularly when it comes to money. Being able to identify those or coach clients through those oftentimes leads to a more successful investment experience. Well, loss aversion is simply the idea that the pain that one experiences with a loss is far greater in magnitude than the same amount of joy they would experience from a gain. And an example of this would be someone's portfolio is $1 million and the market takes it up 10%. They get their account statement and they say, wow, got 1.1 million. They feel pretty good about that. But then had the roles been reversed or market conditions been different, they're up to $1 million and all of a sudden it's down 10%. The pain they experience from being down 10% is far greater than the joy that they got from being up 10%. I think that if you know on the front end, then when you're faced with that circumstance, I think you're more likely to be able to react without too much emotion, that you're able to maintain your investment discipline. Investor behavior is a critical component to actual returns that investors realize. In 2008, 2009, I had a newly retired client. We had put a plan in place so that they had a cash cushion to weather an economic downturn like we experienced. But with the news headlines being what they were day in and day out, this client got understandably very nervous. While I couldn't in any way tell them when markets would turn around, we felt certain that this was not, at this time, as different type of scenario, that things would settle down, that markets would recover, that capitalism would survive. And fortunately, we were able to keep their investment discipline in place. It's something that is very rewarding professionally when you're able to communicate those behavioral finance concepts. Managing someone's wealth is probably the second or third most important thing to that person, next to their family and their personal health. And so with that charge comes a lot of responsibility, and we strive to do a great job with that.